Hey guys, welcome back to another update on the investment portfolio. I know it's been a while since I've posted one of these, just because if you guys recall, I did go on a 2 week trip to Taiwan about a month back. And then since coming back from there, I've just been making several videos on options and basically how to sell cover calls, so that those of you who have been following my channel regularly, you guys can also get into it just because it can be really profitable. So I've been done one of these in quite some time. So I'm excited to jump into another portfolio update with you all. All right, let's get started. So first things first, let's open up the app and check where we're at. So we're currently at $280,000, which it could be a lot worse. In case you've been living, you know, in a bubble for the last half a year, there's a bit of a trade war going on. Tariffs, that's kind of just creating a lot of uncertainty in the market due to Trump. And as a result, we just haven't been seeing any gains, but rather the opposite, just loss by loss for most investors. So we're down a little bit, but it's fine. If we believe that the long-term thesis is that the stock market will eventually revive and go up, which that is my thesis, just hold your stocks, don't sell, and don't worry about it. My best advice for you, if you're finding it hard to stomach this period, is just not to look at it. Find a few more hobbies. Personally, for me, I'm lucky just because I have a couple things going on in my life right now. So those of you who may not be familiar, I am a teacher. That's my main job, but I also have my own private counseling business as well. And I do have a few other sources of work that produces income. So I've just been working on my career this last little bit. So number one, I just got a few interviews done and got a new posting, which is great for me because the new job that I got, basically it's a guaranteed job for life. So at times like these, it's good to not look at the stock market too much and just work on different other aspects of life as well. All right, so let's get into it. So where is everything at? So the TFSA is up all time. It's up $11,000. And I think, in times like these, in times of turbulence, you can see just the true value of having one of these passive monthly income dividend producing portfolios. So my TFSA is all just about monthly dividends. Currently, with what I have right now, it produces about $1,700 to $1,800 a month. And even though a lot of these holdings that I have are stocks that have been going down, we're still up $11,000, 11% all time. If you look at when this first started, this was going back to, hold on one second, about April 3rd. So it's been a year and a bit. So despite all the turbulence and all the gains that we've lost, being up 11% is a great thing. So just to show you what I have, just because I think some of the holdings have kind of changed a little bit. I actually ended up selling my Canadians utilities one, UTES. It was actually at a loss, but because it was producing monthly dividends, the dividends helped me break even and actually earn about $200-300. So I was okay with that because I wanted to put that money and reallocate them somewhere else. So I ended up buying Amazon. It's a Harvest product. So Harvest Amazon High Income Shares ETF, ticker symbol AMZH. Just because I'm very bullish on Amazon, as you can see from the rest of my portfolio later. So I just bought some of this with the money that I got from UTES. So I poured about $12,756 into this with an average price of $13. Currently, it's down 10%. I think this happened probably like around Liberation Day. And I think because of China hitting back and whatnot, it's dropped even more since then. So we're down about 9%, but it's fine because it produces a dividend monthly. Over time, it's just gonna, break even just from the income that it produces. So I like this a lot more than UTES, just because I think with this trade war, for me at least, like I think it's exposing, some of Canadian economy's weaknesses, that, when we get into these kind of crises, we're not, we're not some of the strongest countries in the world, like the US and maybe China. We are highly dependent on things going right in the world. As a result, I just feel that I've just been moving my money more into US stocks. ETHY, so this is Ethereum. I know this hasn't been going up like Bitcoin has recently, but this is the one that I'm bullish on. I think, because it's producing monthly dividends, that can sustain me while, Ethereum eventually goes back up, and we'll be able to gain from gains and monthly dividend. So like I said in a previous video, and also in my Discord chat, I said that, in a time like this, 2025, I'm kind of switching from doing swing trades to going long. Okay, so in this kind of environment, I will go long. When the market conditions change again, I might go back to swing trading more, but right now I'm just going to go long. So holding this in the long term doesn't worry me at all, because I have a plan. All right, the other ones you may more or less know. I'm not going to go through all of them, because QQCL, which follows QQQ, is down because of the tariffs. USCL, I won't go into that either. Tesla is doing well, so I'll just quickly show you this one, because I'm back into Tesla. Those of you who followed me at the beginning, I had a huge Tesla position, about $30,000 to $40,000, and then I sold it all as it went up, and then now I'm back in. My average is about $19.20. Currently, it's at $18. Tesla has been going up quite a bit from the lows of like 218 when it was at the lowest during this trade war season or period, and then now it's up to about 280s, 290s, which translates to about $18 here for YTSL. But I'm at 1920, so I'm probably just a bit above 300, probably 305 region. So it's getting close. But again, this produces monthly dividends, so I'm not too concerned. The one that I will always dive in a little deeper on is the Happy Tea, just because this one is the bond market. So as you saw that, traditionally the bond market and the stock market are inverse of each other, right? So if the stock market usually goes up, the bond market goes down. And when the bond market goes up, the stock market usually goes down. They're inverse of each other because it makes sense, right? Ultimately, these markets are where investors are putting their money. So if they put their money into one basket, like let's say bonds, they can't put it into stocks. Well, what we've seen that's very unique with the Trump situation here is that Trump has allowed both to go down. So Happy Tea has been down even though the stock market is down. So just how down are we? We're down about 10%, 11%, but it's fine, not too bad. This one is paying me about $900 every month just in terms of dividends. So over time, this loss is eroded. And also, again, I'm holding long term. I'm pretty sure this is going to go right back up again, so I'm not too worried. All right, the crypto account. Show you what I have in here. I have Ethereum. My average is about, let's see, 3,000, and currently it's at 2487. So this is a bit of a gain from its lows of 2100 back on April 19th and 20th, but we do still have a long way to go. Again, I'm bullish on Ethereum in the long term, so I don't really mind. A few things that I do want to talk to you guys about that's very important for my account. I am planning to move my non-registered holdings into my margin, but I don't want to do it currently because if I did, I feel like I'll just be taking a loss. If you see all of my stocks here, this AMD stock, I'm at a 44% loss. Amazon ETF, I'm at a 25%, right? BBAI, it's moving itself up, but before it's moving to the price that I have, right, I'm down 16%. ETHH, everything is just down. So I think I'm just going to wait. My plan is I'm going to wait for some of these to break even at least, and then sell out of them, and then just reallocate those funds into a margin account. As you can see, I made it recently, but there's no money put in just because I'm really loving cover calls. And I think I'm just going to move everything from non-registered into a non-registered margin because that account allows me to sell more cover calls. Okay. So those of you who have been following me and some of the cover calls that I've been doing, it doesn't sound like a lot of money that I'm making on them. Like, $90, $100, $150. The most recent one that I'm doing is $320. But something you have to keep in mind is that I'm only doing one small position in my whole entire account. Like most of them are like 0.5% of my portfolio kind of positions. So that's why it's earning so little. But imagine look at my non-registered account currently. Let's see how much money is in there. There's about $67,000 Canadian, in my non-registered. If I can move all that into my margin non-registered and start buying more just stocks that I'm bullish on in the long term, but also can sell cover calls, I'm just going to do that. I think that's what's going to help me earn more money as well, regardless if, this current market recovers or not. If it stays in this, perfect. I'm earning more money on the side passively as the market gets better. And even in a good market, things will be green, and I'm also earning, cover calls here and there, right? So, before this video ends, I am going to show you the cover calls that I'm doing right now and just how insane, how profitable they can be, all right? So I just wanted to tell you that I'm going to start selling some of these and then move my funds into the margin account and start selling more cover calls. So the closest one right now to breaking even is SoFi. I'm at 1404 and SoFi is at 1324. At market close. So once it inches to about 1404, 1405, I'll probably sell out and then just buy back again and then just start doing cover calls on this because SoFi is one of those stocks that I am bullish about long term. So lastly, before this video gets too long, I'm just going to show you the cover call that I've been doing. So the Nvidia one, those of you who watch my cover call tutorial videos, just want to show you, just how good this Nvidia call that I sold has been for me. So I'm just going to show you the entire history. So back on April 2nd, if you look, I bought 100 shares of NVDL for $3,506. Okay. So at that time, the average price was $35.06. All right. I put a huge gamble and I did a 2-day cover call, which basically means that it was going to expire in 2 days, April 4th. Okay. And I did a strike price that was a tad bit lower than what I bought in for. Okay. And I saw the potential in that because the opportunity, because it was $90 just to, do a cover call for 2 days, right? $90 2 days. Heck yeah. With $3,500 invested, that was a pretty sweet deal for me. So I did it. Look what happens. The options didn't get exercised. No one really exercised those shares. No one wanted to buy those 100 shares from me on April 4th. So I pocketed $90.25 and I kept my shares. And then the next week, after the weekend, April 7th, I took those same 100 shares and I did another cover call on it. So this one was a 36 call. So a higher strike price because this time I'm doing it not for 2 days, for 3 weeks. So I want it to be a lot safer. I bought it at 35.06 and I'm doing it at 36 strike price so that, even if it exercises, I'm still making some gain going from 35.06 to 36. That one gave me a premium of $150.25. And then just last Friday, this option actually exercised. So NVDL went to like $36.23. So what ends up happening is, look at this. I got $3,600. If you see what I bought it at $3,500. So I made about $100 there, right? But I also made the premium back on April 4th of $90.25. And I made that premium $150.25. So it was just a great deal in the end. When I added everything up, it was a $390 profit, which basically, if you do the calculations, that's an 11% gain from April 2nd. Was it April 2nd? Yeah, April 2nd when we first bought it to April 28th today. In 26 days, it was able to earn that much, which is crazy. So, even though when it exercises, guys, it's not necessarily a bad thing because I got my money back. I made a great profit. And then today, when the market opened again on Monday, I just bought back into NVDL. And look what I bought in at this time, 34.50, which is even lower than before. And then I did a 35 call, and that was a $320 premium to wait between now and May 25th. Why did I choose May 23rd? Why did I choose May 23rd? Because you always want to see, like, you always got to consider what's the worst case scenario for cover calls. So if you remember, theoretically, the worst situation is if I bought it right now, if I bought 100 shares just to sell cover calls, right? And then I did a strike price just a bit below, a bit above what I bought. So I bought at 34.50, and I sold for 35 strike price. And then on the day when it expires, May 23rd, Nvidia goes up to 40 or 50 or 60. That's the worst case scenario, right? Basically, Nvidia doubles in stock price, but I've only captured the gain from 34.50 to 35, right? And I only made 320. That's the worst case scenario, right? Well, so you always want to see, like, what are the next couple things that's coming up that's going to heavily influence the price or make Nvidia, just kind of soar up. So there's two things. Number one is Jerome Powell, right? It's his next announcement on interest rates and whether the Fed is cutting or not. But the second one, which is even maybe the other one that I was kind of eyeing for this one, was when the next Nvidia earnings report is. So I did the research. It's May 28th. So I decided to do May 23rd. And I look at how historically Nvidia stock prices moves before earnings, and I do notice that Nvidia likes to move up before earnings. It's not one of those stocks where going to earnings, it drops a lot in price, and then after earnings they hit it out of the ballpark. It was a great earnings report, and it just soars up. What we've seen from the last couple of years is that Nvidia tends to go up in stock price just as we near earnings report, and then as soon as no matter how good Nvidia does on the earnings report, it just sells off. So that's why I don't want to expire this Nvidia cover call at or after the day of earnings. I did it on May 23rd, which is about a week before it, so I can capture this premium. And also, I think at least I feel a little safer that Nvidia is not going to double a week before earnings. All right, so I just want to share that, and then also use this video to show you what some of the other stuff happening in my portfolio is doing. Not much. And if you feel like, oh, you're teaching us how to make chump change on cover calls, again, just like what I want to summarize, is because I'm only putting $3,400 into cover calls, right? With my portfolio at $280,000, if let's say 80% of this was allocated to selling cover calls and stocks that I'm going long on, this could be, an insane amount of money, right? So keep that in perspective. Yeah, let me think if I have any last final words before I go. So yeah, I'm going to be very looking forward to this week and earnings report. Excited about Amazon, SoFi, which is happening in like 10 hours, 12 hours, and Visa. That's another big one that I like. Visa is actually the second position other than SoFi that, if I break even during earnings report, I'll sell out of that and put some more money in my margin and do more cover calls. All right. So that's it for this video, folks. And I'll be back soon, maybe hopefully next week with another portfolio update. Bye.